we can quantify, 10 ways to Sunday on how much it's dropped or how much we need it to be, but what do we actually need to count to fix the problem?
I can see the whole wide world with these two eyes, and I can be whoever I wanna be, 'cause it's my life.
Hi, welcome to another edition of Ask Spurrell CPA. Today we're talking about what are key performance indicators or KPIs. I have Tyson here with me here. Tyson, thanks for joining us again.
Yeah.
So Tyson, you disappointed that Will didn't make it to the playoffs?
A little bit, but I'm just happy it's over. I don't have to watch the train wreck anymore.
Yeah, I guess that's the glass half full side of it. We can move on to next season. So the quote that we have here today is a Jim Collins quote, author of 6 business books, including one of my favorites, Good to Great. The good to great companies did not focus primarily on what to do becoming great. They focus equally on what not to do in order to be great. So the statistic that we have here is Industry Canada, 50% of all Canadian small businesses go out of business, and 42% of these failed small businesses will cite that they were unable to attract enough customers, and that was one of the reasons why they went out of business, and one of the ones that we're always trying to solve here. So the story that we have here is we get a business owner and they come into us, to get their financial statements done. And a lot of business owners, they struggle just to get accurate financial statements. But, we help them get those financial statements and we help them understand those financial statements. And, we find out that revenue here is the issue. They have revenue is the issue. And the things that they need to count, there are other things that they need to count that don't appear on these financial statements. And they won't be in the financial ratios. So when it comes to these things that they need to count, Tyson, that are not in the financial statements, what questions should these business owners be asking?
First is, what is the financial statement ratio analysis?
So financial statement ratio analysis, these are basically the questions that you can answer from the financial statements. What is your gross margin? What are your overhead expenses? What is your revenue? What is your revenue compared to last year? These are questions that you can actually answer based on the financial statements alone.
Okay. What is the second most common reason businesses fail?
The second most common reason businesses fail is they run out of cash. So number one is they can't attract enough customers. Number two is they run out of cash.
Okay. In the financial statement ratio analysis, an effective way of predicting cash shortfalls?
It really is, yeah. The financial statement ratio analysis is an effective way of predicting cash shortfalls. Sometimes doing that annually can't predict it soon enough. You could run out of cash in the middle of the year, but running out of cash is usually something that you can project in most circumstances based solely on those financial statements. So it's really useful doing that financial statement ratio analysis, with your accountant, with a professional, and they can tell you if a potential shortfall is coming.
Mm-hmm. Will ratio analysis always give you enough information to solve the root issue?
It won't. Sometimes ratio analysis is not going to solve the root issue. It can tell you that you're running out of cash, which is really important. Or it can tell you another issue. Maybe you have an issue with profitability, issue on your margins. But sometimes it won't tell you how to fix it. What if you don't have enough revenue? Well, we can quantify, 10 ways to Sunday on how much it's dropped or how much we need it to be, but what do we actually need to count to fix the problem?
Right. Do business owners tend to overanalyze financials instead of digging deeper?
Yeah, 100%. So a lot of times they'll go right into that ratio analysis, and it's good to a point, to go into that ratio analysis. But, if the problem is that we don't have enough revenue, and we know we don't have enough revenue, how is it going to help us, if we go back and determine, what our revenue growth has been for the last 5 years? Mm-hmm. We already know the answer. Revenue is too low. That's the problem. Or there could be another issue. Maybe staff turnover is too high. What are the other things that they can focus on in their business? rather than going deeper and deeper into the ratio analysis. How do we actually fix the problem rather than just over quantify the problem?
Right. Are there numbers business owners should be tracking that are not in the financials?
Yeah, there are 100% other numbers, quantifiable values that they should be tracking that are not in the financials. And they should be just as diligent in tracking these numbers as they would be tracking their financial statements themselves.
What does KPI stand for, and what does it mean?
So KPI stands for Key Performance Indicators. And my interpretation of Key Performance Indicators are these are the things that you need to track that do not appear in the financials. So everything that appears in the financials, this becomes part of the the ratio analysis. We're looking at the ratios that are in the financial statements. But there are cold, hard numbers that you should be tracking that are not in those financial statements. They're not esoteric, vague terms that how you're feeling, woo-woo type things, but they're really cold, hard numbers that you should be tracking in your business, likely each and every week, on what's actually going to drive those financial statements.
Okay. What is the most common reason for businesses?
So that most common reason for business failure is the failure to attract enough customers. We go back to it. Of all the business owners that fail, 42% of them will say they couldn't find enough customers. That makes it by far the most common reason of business failure. We always have those top 3 reasons. They can't attract enough customers, they run out of cash, and they can't find the right team. Those top 3 reasons will overshadow all of the reasons. They'll be bigger than all the other reasons put together. But that reason, they can't have enough customers, they can't attract enough customers, it's by far the single biggest reason.
Okay. What are some of the KPIs that business owners can track to fix revenue generation issues?
So the KPIs that you can track to fix revenue generation issues, first and foremost, I would be tracking, the number of reviews, and specifically Google reviews that your business has. And this might sound, a little bit crazy, but how many Google reviews does your business have? But 88% of all buyers these days in most small businesses, before they purchase from those small business, they're actually looking at the Google reviews. That doesn't mean that they won't purchase from you, but 88% of them are at least going to look at it and consider it. When we move right up through the chain of the other things that they should track is the Google reviews, to the amount of content on the website, to how much they're spending on advertising, to how many impressions that those advertising pieces have, to the number of clicks on that advertising, to the number of leads that actually generates. So there are very set quantifiable values that each and every business owner should be tracking in their business if they're having revenue generation issues. Okay.
What is the third most common reason for business failure?
That third most common reason for business failure, it goes, failure to attract enough customers, running out of cash, and then it's the failure to have find the right team to execute on the project. And like I said, those 3 reasons are going to overshadow almost all of the other reasons put together. But that one, the failure to find the right team, that one is one of the most significant problems for sure.
Mm-hmm. What are some of the KPIs you can focus on to get a better team?
Yeah, and this is one that maybe I learned further down through my business career, is that when you talk about team and culture and retention and those sort of things start to sound like a little bit more not quantifiable. Things that they almost have this intangible that how could you possibly quantify being able to find the right team? But you can 100%. There are a lot of indicators that are going to help you along that path. Right down to, if you want to, find the right team, how many candidates are you actually interviewing to fill one hire? Are you hiring the first person that walks through the door? Or are you seeing 100 people and actually meeting 100 people? So I don't mean getting 100 resumes. I mean meeting 100 people to actually hire someone. That's a key performance indicator that you can, easily track, to try to find a better team. And this extends beyond just acquiring new team members. This also extends to, how do you develop your existing team and your existing culture within your business? And, people will say, well, how could you possibly track and quantify culture? Well, how often do you actually meet with your team? The old standard, the monthly staff meeting that almost never happens in other businesses. It gets canceled in summertime. It gets canceled when it's close to Christmas. And by the time everything's said and done, that monthly staff meeting is like, 6 times a year, as opposed to a business that actually gets in front of their team members each and every week. So we're talking a business that is getting in front of them 52 times, or maybe a couple of vacations, maybe 50 times a year. The number of times that you actually get in front of that team, it doesn't matter what culture or what vision that you have. If you don't get in front of the team members and try to explain that vision, it's never going to execute. It's never going to happen. And so you can 100% track, how many staff meetings that you have, how many training sessions that you have. Not just have this goal of having a great culture, but what is your metric to implement it? So I think that's what we have here today on key performance indicators, KPIs. Thanks so much for tuning in. As always, please hit the like and subscribe button so we can continue to deliver you tips on how to beat the odds at business. And if you have any questions or comments, please leave them below and we will address them in a future video. Thanks very much.